Let's look ahead to the key events and themes this week. Starting off with the dollar, we did see an impressive non-farm payrolls headline and a drop in the unemployment rate, so that has now laid the foundations for a dollar pullback. In terms of how large that will be, that's only going to be dictated by US CPI inflation. And personally, I still see it subdued for the short term at the very least. Components or some indications heading into this, well, personal income is still low in the United States. People are not getting paid enough money. That seems to be a global theme at the moment. And also consumer spending. We've seen a contraction in retail sales for the US for the past few months now. And I think that's likely to remain the case. Nothing indicating a change in that anytime soon. Nevertheless, general consensus is for a pickup in prices across the board. If that is the case, expect this consolidation to gather some pace for the greenback as hopes of a rate hike from the Federal Reserve before the end of the year. As we know, this is something inflation is holding the Federal back from taking another move in terms of rates. In terms of the UK then, for the pound, every bit of data is going to be heavily scrutinised now going forward for the coming months. As highlighted by the Bank of England, Brexit is really starting to have its negative effects on UK or on the economy for the UK, as it's evident in some of our key data points. So this week we do have manufacturing production. As we know, in recent GDP, it has been a notable laggard in terms of the manufacturing sector on our growth. And also we do have trade balance data, and the UK for over a decade has been suffering with quite a large trade deficit. And the IMF have recently reported that Britain need to try and tighten this up because they are underperforming against its counterparts. If we do see this number lower or these numbers less than impressive, then expect the pound's fall to gather some pace and firmly look at breaking 130 to the downside. Where, as we know, when the pound falls, it does tend to fall quite hard, so just be wary of that. Over in the oil market, big week for oil, I must say. We do have respective reports from OPEC and the IEA updating on the oil market, and we also have OPEC meeting. In terms of the reports themselves, I can't see anything other than downbeat for the oil market in terms of output still going to remain excessively high. The demand's still not there at the moment. The OPEC meeting themselves, well, not expecting any change actually for them to announce. As we know, their last meeting, they did leave both Libya and Nigeria out because of some attacks at their key oil fields by rebels. They're likely to introduce those guys, but it's still not going to be enough in order to try and stabilise the oil market, guys. So I think this could really weigh on oil prices across the board. And as we know, the reason why I mention this, because commodity and currency, Canadian dollar, is subject to some downside movements if oil prices fall. So just be aware of that, guys. Mark those in your calendar. It's a big week for oil. Very lastly then, looking over in New Zealand, we do have the RBNZ's rate decision. No policy change expected. It is the Governor Wheeler's last monetary policy decision. He's not expected to go out guns blazing, but what I would say is expecting this to remain dovish neutral, more to the dovish side of things, because they can't raise rates anytime soon. The labour market in New Zealand is still weak. Housing market is weak also. Inflation is still extremely subdued in New Zealand. So we can't expect any change anytime soon in terms of rates. Analysts are forecasting another 3 years, not until 2020. And I think that they're going to be uncomfortable, like the RBA, with how high the exchange rate is. So expect them to try and talk that down also. They're ones for doing that as well. So in terms of fundamentals and technicals, in terms of Kiwi dollar, that does look subject to some further downside, guys. Another pullback. It has been rising since sort of May this year, so expect that potentially to come down. So other than that, that's it from me. Have a smashing trading week. Thank you.